Hey traders, this is Christian from Hertz Tribeca Trade Group, and this is your end of day, end of week, and end of month video for Friday, October 30th. Because yes, the 31st does land over the weekend. So when we start on Monday, it will be a new month of November. So we'll go through a couple different things in this video, but let's talk about the price action first, and then we'll talk about for the week, and we'll talk a little bit about for the month, and I'll relay my performance for the month because again, I am running a service, and if I'm running a service as the Tribeca Trade Group, I have to be transparent with everybody, right? It is a must to be honest and transparent, yeah, and if you are subscribing to another service or something like that, please make sure that they're doing that too, right? Everybody should be showing their performance for the month. All right, so let's talk about the price action. Interesting what we had here for the day. SPY, was not a terrible day overall. And I think if you look underneath the radar, you'll see why when we talk about sectors. But SPY was only down 1% for the day. That's not that bad. The performance during the session, right, it did fall down about 0.5%. Really where a lot of the damage was today was in the Qs, right? A lot of those names that reported earnings, the Qs finished down 2.5% for the day. They fell a lot during the session, 1.8%. The Dow didn't really do much of anything. You can see the Dow actually outperformed, it was only down 0.5%. That's not that bad. Small caps kind of mixed in the middle there. They did finish down 1.3%. This should be highlighted probably in this pink color. Really interesting too, I think, is what happened with bonds. So bonds were down 1% again today. I heard the beginning of Fast Money on CNBC. They were talking about how it's pretty rare to see that happen, to see bonds down as well as equities. But I do think it's kind of telling because this is something that happened last election. So we talked about that in a couple of videos. I'll rehash that a little bit when we talk about the banks here too in a second. Gold, they didn't help you today too. They gave back early gains, still finished up for the session, and the VIX was down. Was up for the day, but really sold off. Especially during certain times of the day, the VIX kind of trailed off a bit. All right, so interesting performance there for the VIX. Yes, it did finish up 0.1% for the day. Huh. Yeah, maybe I must be marking at prior than the open because I don't see it falling 6.8%. But in any event, it was only up 1.1% for the day. Let's talk about sectors really quick. A little bit of surprises on here. When you were looking at names like Apple, Facebook, Amazon, and seeing these things down, where did these names finish for the day? Apple finished down 5.6%. Amazon was right there too, right? You look at these and you're like, wow, pretty big washout. Then you look at the banks. What did the banks do for the day? Up 1.5% for the session. They rallied 2.2% for the day. So, I think this is quite notable. And once we kind of get through the election, I think really, what I want to be doing is really being objective about what areas may show new leadership, right? We'll be talking about that, very, very much in detail, and we'll be watching that very closely in the next couple of weeks. So I wanted to talk a little bit about that election move that we saw back in 2016. Before I do that, let me just round out the sectors. Interesting there, the FANG stocks, they got hit the hardest today. At one point, they were down like 4.5%, the group, right, which is FDN, that's the Internet ETF, but they backed off a little bit from that. Did still finish down 3.9%. Software, which didn't have a lot of names reporting in that group, also got hit pretty hard. Clean energy. When you look at a lot of these groups, what's common to me is they're higher beta names, right? So higher valuation, but yeah, basically higher beta. Biotech's in there too. That also had a pretty poor day, down 2.1%. So really, it wasn't just about the FANG stocks, right? They did get hit hard, but basically just anything that any growth areas got hit pretty hard. I would say that. All right. So we'll see if this is a trend that continues. So what I wanted to talk about next with you is just a little bit about what happened last election. So number one, we've talked about bonds. I've gone through this before in another video this week, but I'm going to rehash it again here. When we look at the 5-year chart, let me see if I can zoom out here for just a second. Let me just reset this chart. But I want candlesticks and a 5-year chart. All right. Remember what happened back here. All right. So now I'm going to zoom in. All right. Bonds really sold off. And this started a little bit going into the election. Right. They were already starting to trend lower, just like we're seeing now. Right. Let's fast forward to what TLT looks like now on the daily. Right? And I think I went through this, maybe it was last week, right? Trending down. Notice what happened in 2016. Also trending down, and then they fell off a cliff, right? From October to December, mid-December, they got hit pretty hard. Now, I don't know if that's going to happen the same way, but I'm open to the idea that it may happen again. What about your banks? By the way, if we go back, so first of all, I want to just bring up the 5-year chart again, just to show you with the banks. So again, I'm bringing this up. I'm not saying I'm definitely going into these groups. I'm just being mindful to what happened, right? So this is 2016. If we zoom in here, again, banks were already starting to trend higher, and then took off like a rocket ship after the election. And they did this for a couple months, went sideways, and then continued to go a little bit higher. So where are we now with the regional banks? Right? They're trying to rally here. I found this pretty interesting that, I was getting bullish to the banks last week. I had a couple trades on, and once they did this, I kind of abandoned the idea because I felt like we've seen this before in the banks. But look at them come right back. They're back above the 200-day moving average. So we'll see if this continues. I just find it interesting. Obviously energy was strong the last 2 days, but these are deep in downtrends, and I still don't want to spend too much time there. But I think it's kind of interesting. What transpired around that 2016 election time. What about technology? What did technology do? All right, this one I won't zoom out on. I'll just zoom in. Oh, I did give you the 5-year chart. All right, but 2016 for XLK, they did not perform wonderfully. Right, they kind of went sideways around the month of November. They actually went down a little bit. They did find their footing, and then they began to rally again. But just keep in mind, there was a lot of back and forth. There was heavy volatility around there. Look at what happened to the tech group, the tech stocks at the end of November and into December. Right, they sold off hard. Now, zoom out a little bit. Look where they are now. Right, my point is just be mindful that there's going to be times where different groups have volatility and see a rotation out of, and other groups may run with the ball a little bit. So really, like I said, that's going to be our job going forward, is to be, aware of what groups may provide, even if it's short-term new leadership, right? So we'll be on that, as I usually do. I usually do find these things out pretty quickly. All right, so that's a little bit about today's performance, a little bit of what I'm open to seeing post-election. Next, what I want to talk about is the S&P chart. So do we have a lot of support here? No. This line right now is holding 3264.25. We're holding on by a thread. We could hold this and bounce next week. There's no doubt about it, that it's possible, right? But let's examine in case we don't, right? So this value area is just for October. Once we get to November, we've got a new value area now. So Anything below 3341 kind of means that we're trending down in the short term, right? So be mindful that we're going to have to maybe contend with that resistance up there at 3341 at some point next week. All right. The other thing is, just to kind of rehash what I've been talking about now for a couple weeks, is that we lost the uptrend, short-term uptrend, right? Again, I look at the 1 hour chart a lot. It helps me a lot because I do a lot of short-term trading. Short-term to middle, what is it, middle term, midterm, swing trading, right? So if you're a long-term trader, then you don't have to necessarily look at the 1 hour chart. But if you're a little bit more short-term focused, the 1 hour chart will tell you what's going on, what happened last week, right? And since we broke value and this 200 period moving average last week, there's been feeble attempts to get back. And notice what is, how the personality of the market changed once we just broke this line. So again, this is very simple stuff, right? I've got a 200 period moving average on here, and I've got my indicator, which gave the same signal at the same time, a break of value and a break of the 200 period moving average, right? Once we did that, we lost the trend. Notice what happened since. We've never been able to retake it, right? Notice, a couple of the other moving averages that I have on my charts, the 20 period moving average, a couple of times we tried to get above that. We tried to get above it on Thursday, couldn't do it. We tried to do it, I think, in the morning, and we couldn't do it. So again, these things, regardless of like all the other events that are going on, right? This week was a huge week of earnings. Next week, we're going to have the election. So we've got a ton of landmines around. But if you're focusing on the price action, it's telling you everything that you need to know. And it's risk off right now, right? And when you lose the short-term moving average, and breadth confirms, right? Breadth for the most part has not been good in the last 2 weeks. That is telling you to stay more on the sidelines, right? If you're doing anything other than that, you're fighting the tape, right? Unless you're playing a lot of short, things to the short side, then you're going with the tape. But if you're playing a lot of things to the long side, you're fighting the tape, because right now we're in a short-term downtrend, and also market breadth has been weak. Now, remember what happened. This was the same situation, not same, but similar situation to what happened to us in September, right? September, once we broke below the 200 period moving average, we made several attempts to get back above, and we couldn't. So you had to let this play out, right? And I know it's one of the hardest things for traders to do, is to just let the price action play out and sit on your hands. Let me tell you, I've been trading for a while. I've been trading my own money for a while. Of course, I traded institutionally for a long time, but I could tell you from personal experience, it is one of the hardest things to do, to sit back and not get yourself wrapped up into a market that is not giving you good opportunities on the long side. All right. So this happened in September, and then notice what happened once we got above the 200 period moving average and above value. We really took off, right? And also at that point, we started to see more short-term highs versus short-term lows. So breadth was expanding throughout this little cycle, right? Once we broke below last Monday, it's been a completely different story. So this is a great way, I think, a great roadmap, as I like to call the market webs indicator that we use, to basically stay as neutral as possible. Forget about all those things that are going on. Now, they did coincide, right? All these things that everybody's worried about. Basically, you got that sell signal last week, right? And anything other has just been basically, there's a lot of noise on the tape right now, and there's a lot of traders making decisions that are probably a little bit, what I like to refer to as weak hands in the market, right? They're doing things probably a little bit backwards, right? They're getting out of the market because they're fearful right now. Also, if you notice the positioning, right? This just came out the other day. This is the speculators, right, of S&P, right, non-commercial futures holders, right. Notice what they're doing here. They're getting long at the wrong time. Why is this important to watch, by the way? Because the speculators are normally wrong. Take a look at what happened, how they were positioned back in March, April, May, June, when the market was taking off. Let's see, can I put the S&P in here? Maybe I could do it on a different screen. Here we go. So if I put SPX in here, just so that you have a frame of reference, and let's try to line these time frames up a bit. All right, so April. So yeah, so March, when they started to get short, the market recovered. Right? So, that's why I use this. So what are they doing now? They're on the wrong side of the fence again, right? And that's probably why you see what you're seeing this week is that they're forced to sell. They're forced to liquidate, right? They got long at the who I don't know who in their right mind would get long going with all these events, like getting super long, right? With all these events that we've had to deal with the last couple of weeks, but apparently these speculators were doing it. So crazy to me, but then they got caught, right? So that's a little bit of what we're seeing too. If you want a little bit of backup, in terms of this price action, but for now. We know that we're in this downtrend. I would be mindful of this virgin point of control for next week. That is our support for now, right? We don't have a lot of support behind that. So we're going to have to hold this level, call it this week's lows. If not, we have problems. We have more problems to the downside. So be mindful of that, And so what I will be doing, if we break 3230 in the S&P, I will be getting out of the way. Right? I will not have a lot of positions on, and I will let this price action go to where it wants to go. And at the end of the day, once we get through the election too, I think we're going to get a lot of buying opportunities. Why am I optimistic? Well, if you look at things like credit spreads, right, I do believe that the fixed income market is a little bit smarter than the equity market. It's a bigger market. You could certainly get some signals from it. This is credit spreads. What are credit spreads telling us right now? They are not ramping up, right? So they are not showing any panic right now. The fixed income market is not panicking. I think that's telling, right? I think that it tells me that what we might be going through, and I don't know 100%, but I think what we might be going through is some weak hands in the market and some temporary dislocations in the equity market. Let that work its way through. All right. If it doesn't make sense to you, this price action and Amazon and Apple and all these names going down a bit, just get out of the way. Right. There's going to be times in the market where things are not going to make sense to you. When that happens, when you're sitting there watching the screens and you're scratching your head because things are not making sense, that doesn't mean to force. That doesn't mean to force and put on and keep powering through. That means to back away from your computer screens a little bit when things aren't making sense. All right. So make sure that you're making these adjustments as a trader. Again, it's very difficult to do this. When a lot of times people have do the same patterns every day, you have to kind of break it apart a little bit and say, hey, things aren't acting the way they should. All right, let me review this week's performance. Pretty ugly, right? But again, these are things that we've been talking about now for a couple weeks that there could be that I said that there definitely could be some volatility related to all these events going on. So we got it. Did I think we would go down this much in a week? No. I thought we would get more chop than anything else, and maybe a little bit of volatility a couple days. But clearly, so the 5-day performance, SPY down 5.5%, Diamonds down 6.4%, Qs down 5.5%. We talked about some of these other areas. Weak performance in gold. Not much of a hiding place in bonds. Really, cash is king. Cash has been king. That's your best safety spot to kind of avoid things rather than trying to pick something that you think might be uncorrelated to stocks. Cash is really the right place to be. Performance, best performance for the week. Look at the Chinese internets. We're at 1.2%. We participated a lot in those a couple times this week. Made some nice winning trades in that group. Didn't really trade them too much today. All right, and I do like to talk a little bit about what I did in the trading room. You know, try to scalp a couple things today, but for the most part, try to just basically get out of the way. I actually took a couple stops on some new trades. Right, this was a trade that I just added yesterday because I like the chart setup. But I'll tell you what, if it's not doing what it's supposed to do based on your setup, you got to get out. Right? It's not the end of the world. What can really damage you is if you don't honor the stops and the market continues to go down. Right? So again, it's all about discipline and it's all about having a process. Right? I was looking at this name. By the way, let's look at JD. By the way, I do like to. I will always, just because I get out of taken out of a trade, I will always keep it on my radar. This actually came back and looks fine. So I could have re-entered this. I didn't. But the reason why you take a stop is because stocks are moving very fast. Look at this TDD, for example, which I also thought was materializing as a decent setup. It was trying to put in a bull flag. Look at what it did today. It's down 8%. That's 50 points, right? So if something starts to fall and it hits your stop, I use soft stops, so I like to give myself a little bit of tolerance to see what's going on in the market. But when I'm in doubt, I will just take the position off. Sometimes I do it a little bit late, but look at this thing, right? It was just about to flash a buy signal, and the thing got smoked. I mean, 8% is difficult, right, to deal with. It's another thing too with some of these hyper growth names. Make sure that you're position sizing them correctly. All right. So again, I'm not telling you what to do. This video is for information purposes only, not giving out any advice or recommendations, but just kind of giving you some hints of what I tend to do. You have to make sure that you're risk adjusting some of these positions, right? So anyway, we'll leave it there for the week. For the month, yeah, I'm a little bit disappointed. I was up for most of the month, but I finished right around flat. I think I actually may be down 1 or 2% for the month. That's not great, but it's not the end of the world either. When we look at the performance for this SPY for the month, the SPY did fall 2.5%. So I like to outperform. I didn't do it this month, so shame on me. Q's finished down 3% for the month, but it's not the end of the world. I'm still up very nicely for this year. And, the important thing is when the market's not giving you opportunities, don't take any more than, if you underperform a little bit, I think that that's okay. It's not great, that I didn't turn in a positive month this month, but, you live to fight another day and trade when there's a little bit better opportunities on the tape, right? That's how we do it, right? We really take advantage when the market is giving us opportunities, and we try to lay a little bit low when the market is not giving us great opportunities. All right, guys, that's it for the weekend video. Not the weekend video, but the end of the week video. Have a great weekend, and I'll see you guys on Monday. Members, of course, will receive the regular macro and watch list trade setups going into next week.